Okay. Hello, everybody. This is John, the Rhino, coming at you here on the 13th of May, 2021. And in today's Rhino Live, I wanted to cover short selling. A lot of traders are reluctant to short sell. They're confused by it. They don't understand it. They think it's something real exotic or whatever. It's just another thing to add to your arsenal as a trader in order to pull profits from the market. And that's what it's all about. If you can only pull profits on the long side when things are going up, you're definitely, restricting yourself. So short selling opens up a whole new window for you to make money because, as we know, and we sure are seeing this right now in May. I mean, we've been seeing this, let's say, since mid-February, March, April, and now May of 2021. We've had a lot of up and down, and nothing's really gaining traction. So let me first try to explain short selling in its simplest form. Okay, we all know what it is to go long. We buy a stock low, hopefully, we sell it higher. We buy it, we own it, we sell it to the next person at a higher price, and we made a profit. So we buy ABC at $10 a share. It goes up to $12 a share. We sell it to someone else, and we made 20%. That's very easy to understand, and everybody gets that. Buy low, sell high at a later time. Just reverse that for shorting. We're going to sell high and then buy low at a later time. It could be minutes later, day later, hours later, weeks later, whatever. Okay, so it's still the same thing, right? We're going to reverse it though. We're going to sell something first, and I'll get to how we sell something that we don't own at a higher price, and we're going to buy it back to close that out. So the first thing that you need to know about short selling is that not all shares are shortable, not all stocks are shortable, and your broker will not always have the shares that you may want to short. It depends on their inventory. Brokers can also go out into the open marketplace and obtain shares for you. Now, I have several accounts. I use TD Ameritrade pretty much, I'd say, for 80% or so of my trading. I also have an account at E-Trade. I've had accounts at all kinds of brokerages, Schwab and Fidelity and Interactive Brokers and so forth. TD Ameritrade is a little bit limited on what they have available for shorting. E-Trade is very good. I just don't like their platform as much as Thinkorswim. But that's the first thing, is you might identify something that you want to short and then go to short it, and your broker says, sorry, we don't have the shares. So that does happen. But getting back to our example, when we bought ABC at $10, it went up to 12, we sold it, we made 20%. We're going to reverse that. We're going to borrow shares of ABC from our broker. They're going to loan us these shares, and they have a small margin. That's what margin is, right? They have a small interest charge for doing that. We're going to borrow it at 10. We have to give them back the shares. Now, they don't care when we give them back the shares if it's 12 or it's 8 or it's 18 or it's $2. It's all the same to them, right? They just get back their, let's say, 100 shares. What we're hoping is that we can borrow ABC, 100 shares, at $10. We're going to sell it to somebody at $10. Now, we got to close this trade out. To close it out, we buy the same 100 shares, hopefully at $8, give them back to our broker, and we made 20%. So I hope that makes sense. It's kind of hard for people to get their hands around, but when you understand it, it's really no different. In essence, it's no different than what you have with a long. I'm sorry, I'm kind of getting conflugered here with the meeting controls. Just a minute. Okay. Russell, you may be muted. Can you, when I just did that, could you see that screen?
Hey
Russell?
John, yeah, I saw it. I
You
just
saw it? Okay,
unmuted.
let me
Yeah,
put it
yeah.
back up. I want to make sure. Okay, so
Thanks.
this is a short sell that we did in Rhino Alerts yesterday, and the stock is ARRY. And I alerted and we sold it short. So I borrowed the shares from TD Ameritrade. I sold short here at approximately 16.09. Okay, that was at about 9:18 a.m. Pacific time zone. And it went down and it went down and it went down and it went down, and which is what we want. And then it kind of kicked up here and we exited at 1503. The price was 1503 at 11:42 a.m. So we were in this trade for about 2 hours and 20 minutes. How much did we make? Well, I borrowed the shares and it was 1611, and I then sold them short, bought them back to close out the trade to give back to my broker at 1503. So we made about $1.15 or so per share, or about 10%. That's it. That's a short sell. There's nothing magical about it. There's nothing exotic about it. I do want to say about short selling, though, that you need to have different expectations. This is a 10% profit on a short sell. That would be like making, say, 30% on a long. If you can pull a 20 or 25% gain on a short, that's very, very, very good. Occasionally, you may get like a 40 or 50% winner. So it has to go down by 40 or 50%. That's like making 200% on a long. So your expectations have to be quite a bit less of how much you're going to make. The other thing that I want to say about shorting is, yeah, this went in our favor, no problem, right? But stocks have a tendency to go up more than they go down. They just happen to go down more sharply and more severely over a shorter period of time. I highly recommend that you have a stop for your short sells. So here, when we entered this was my stop up here. You can set a stop just like you can for a long, but it's the opposite. If we went long here at 1611 and we had a stop at, say, 15, it would sell our shares at 15. This is the opposite. We can have a stop, all the brokers allow it, at, say, 16.62. That says if it goes up to 16.62, I want to be closed out of this trade, which means that automatically the computer is going to execute a buy order for me. So you can have stops, you can have limit exits as well. As a matter of fact, that's how I got out of this. So down here, as it's going, I've got a limit. I probably had my limit down here around 1450. And that says if it goes down to 1450, take me out. Well, it didn't. It bounced. And so I moved that limit up here and I exited. So you have those same tools available to you. Let me get out of the screen. You have those same tools available to you just like you do when you go long. You can have limit entries, you can have market entries, you can have limit exits, you can have stop exits. All those same tools are available to you. The only difference when you initiate it, and it's not going to work because we're in after hours right now, is that you would sell is your first activity instead of buy. So I hope that that clarifies things. I don't know what it is or why it is that people are reluctant to short. They think it's, I don't know what they think it is, but if we get into an environment, which we certainly could, where the market just goes down, 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 down for, and I'm not talking about for like a couple months, I'm saying for a couple years, then shorting is going to be the only solution. So you really, I believe, would do yourself a service if you learn how to short sell in the event that that occurs. And it's just another way to make money. So that's it for the presentation of a short sell, what it is, how it works, how to execute. Each platform is a little bit different. I want to touch on that real quick. So let me share my screen again. Okay, I'm in TDA. If I was going to short this right now, and it did go down more, by the way, but let's just say, I'm not, on all kinds of different screens. Let's just say I wanted to short it right here. I would do a sell, not a buy, a sell. And then I come up with a screen just like you would if you were buying, and I can change that to, I can do a limit, I can do a market, I can do a stop, I can do this, I can do that. And once I execute it, it would actually show that I would be negative 100 shares in my account. So that's how you do I can't show an example of buying to close, but that's your second action once you're ready to close it out if it's dropped in price or if it's gone up in price and you have to take a loss. Because that does happen. You can lose money just as easily on a short as you can on a long. So with that, I'm going to close out the presentation. Just one moment, folks.